He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Yeah. And our 90-day default rate, in other words, people who haven't been able to pay correctly for 90 days, which is the typical measure banks use to say whether you're in trouble or not.
Yeah.
Because you can always miss one payment, right? Like you've been on vacation or something, changed banks or something happened.
I had a
right?
case where somebody said, oh, I just, it came in earlier than expected, so I didn't have the funds in the account. Yeah. Something like that could happen for sure.
It can happen. Yeah. So then you catch up. So they don't even care.
Yeah.
Like a one-time arrears, a one-time bounce on your mortgage, not really paid attention to. But it's just this 90 days of arrears. You haven't been able to make the full payment for 90 days.
Oof.
That's the key measure, okay, that you're in trouble.
Yeah.
And that rate in Canada is still only about 21 basis points. So in other words, less than today, less than 1%, way less, like 79% less than 1%. It's a very small number,
It
are in 90-day arrears, 90-day default. Compared with like a good year in the United States, it's 34 or 36, right? So when U.S. bankers look at our banks, they say, you're stupid. You're not lending enough. Your arrears are so ridiculously low. It doesn't make any sense. Now, let's get this straight. They're going to go up. I mean, the economy's suffering. Unemployment causes default.
Yeah.
We know this. It is this, when you talk to a chief risk officer at a bank and say, what do you worry about? He says, I worry about three things. Unemployment. That's what I worry about because you can't rescue that, right? There's no method to fix that. Your income's been cut in half, or family income's cut in half.
Yeah.
You got to eat, okay? And the mortgage is too high. That's it. So, but all that being said, very low default in Canada. You are correct. Incredibly low. It's gone up a little. It used to be 16 basis points. That's so ridiculous, right? That's just ridiculous.
Still, yeah.
Yeah. So that is low, and it will continue to be low. But what happens is that all those people who might want to go in and they'll yell into the phone, at Royal or CIBC or RBC or TD or wherever it is. Hey, no, I want them to God damn it, the rates are coming down. I want my payment to come. That's not what your contract said.
Right.
That's just not what the contract said.
Right.
You hit trigger points. You hit contract requirements. We raised your rate. We don't have anything baked into the contract to say your rate goes down. You can apply, but it's on the basis of hardship.
Right.
Okay?
Right.
So that's your answer, folks. Everybody out there who's saying,
my rate hasn't come down yet, or
what the hell's going on here? I mean,
remove yet, because it's probably not going to happen.
Okay, look, that brings up what is the solution. So what is the solution? You can switch, right? You've got a variable rate. You can say, well, the hell with this variable rate that never comes down. I'm going to switch to the variable rate that does come down, all right? But that's a penalty. You switch banks prior to the renewal date. It's a penalty.
Right.
The penalty in variable is always the same. Every bank's the same. 3 months interest. Okay. There's a few banks that have something called a bona fide sales clause where you can't get out at all, or if they have a very high penalty, like 1% of the mortgage penalty kind of thing. But that's rare. I'm going to say 98%, 96%, somewhere in that range, are all 3 month penalty. Okay. But prime today is 645. Yeah. So 3 months interest on a $500,000 mortgage is just under $5,000. Yeah. Okay. So it's still real money. But if you're stuck in that situation where you would really, really, really like to see your payment come down, start talking to other banks, start talking to mortgage brokers. Okay. Call up mortgage brokers. Say, hey, show me the numbers. It's easy to calculate the 3 month penalty. How much can you save me? Whether it's fixed or variable you go to.
Yeah.
What can you save me? Because in theory, you you could pay the penalty, get out of one of these variables that won't go down for 2.5 years or 2 years. You can switch over to either a fix, but if you even took another variable, that variable is going to come down. You're going to go with a bank that has it come down, right? You're going to go Scotia or MCAP or FirstNet or National Bank. You're going to go with somebody who you know the payment comes down every time the rate comes down. So by doing that, you will end up in a better situation. But you have to do the calculation. You got to do the math.
Yeah.
You got to make sure that the cost of the penalty versus the savings to switch
makes sense.
Pick out the spreadsheet, figure it out.
Yeah.
Okay.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.